Double-digit home price growth. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I'm still working through my morning stein of coffee, and earlier today we looked at an article that was discussing the fall in house prices. And I thought we'd have to look at another one discussing apparently double-digit home price growth. Now, before we go through this article, it's discussing Brisbane suburbs recording double-digit home price growth. Let's jump over to the Property Council data room. Now, this is freely available to everyone. The link is research.propertycouncil.com.au data-room. I just type in Property Council data room in Google if I want to find it. Some people were asking how to get to it. Now, if we scroll down here, we can see the median residential house value up here. And this is from the 31st of March. And Brisbane, right here, my city, we're talking $540,000. Still, a bit high with regards to wages, but definitely much more reasonable than a Sydney mortgage. Much more reasonable. You're going to, in some ways, you'll be living a much lower stress life in Brisbane with a lower mortgage than in Sydney. What's going to result in a happier life? You tell me. I think lower stress is the key. But then again, I'm getting old. So, the Brisbane suburbs recording double-digit home price growth, everyone. Quick! Jump in now. Quick. Hurry. Brisbane's residential property market is weathering the pandemic storm, flying in the face of fears house prices would plummet, new research reveals. But here's a thing. We've got to remember, everyone. I'll bring up this chart here. You can see capital city property prices since September 2005. Look at the Brisbane line. Brisbane with the maroon one there. Our growth has been nowhere near as insane as Melbourne, Sydney, or even Hobart. Hobart. I'd hate to see what prices are up in Lonnie as well, down in Tasmania. So, there we go. The latest Real Estate Institute of Queensland quarterly market monitor reveals the median house price for the Brisbane local government area rose 1.5% in the year to the end of March to $690,000, while unit price rose 1.2% annually to $420,000. So we're getting different data to the Property Council data. 12 suburbs outperformed the overall market, achieving double-digit house price growth over the 12-month period. They were Fig Tree Pocket. The median house price in the western suburb jumped 36%, followed by Milton at 34%, Windsor at 24%, and Seven Hill with a 22% increase. Okay, I'm more interested in the prices of these suburbs to see how far they are away from. They're away from the mean. The median unit price in Bulimba rose 22%, followed by more than 17% Moree, 16% in Enoggera, and 15% in Morningside. REIQ Chief Executive Antonia Mericorella said Brisbane was on track to be one of the best performing property markets in the country over the next few years, despite the uncertainty created by the health crisis. Well, it could be because our property has not just reached as ridiculous levels as other cities. You can live quite comfortably here in Brisbane, even just a little bit away out of Fig Tree Pocket. You can have a nice big house. You can still have a block of land. You're not crammed in like sardines. And your mortgage won't be insane. It won't be insane. Getting close to $1 million mortgage. For the price of a deposit, you could pay off half a house in Brisbane. Just think about that. And if you're working remotely, what does it matter anymore? What does it matter? So I think we're going to see a lot of factors come to play in the years moving forward. People have learned to work from home. They've learned to work from home. So what's keeping you locked in? Schooling. People have schooled from home. Distance ed schooling will increase. So maybe there's time. Maybe there's new opportunities. People realizing what's locking them down and what isn't. Miss Macarilla said the Brisbane market had managed to remain stable despite trading restrictions during the lockdown because real estate had continued to transact on the back of the federal government's economic reforms. So it's just Is it just propped up by all the interventions? Historically, Queensland's property market has shown strong resilience during times of economic turbulence, she said. I think it's just because we're still going to be seen as affordable. Someone coming from Sydney selling, even if they sell at a loss, maybe they're retiring, they come up to Queensland. The weather's a lot nicer here. During the GFC, prices strengthened over the medium term in many locations, courtesy of economic stimulus as well as lower interest rates. Likewise, after the last recession and subsequent natural disasters, prices continued to firm over time, even with high unemployment. The illiquid nature of property, as well as the proclivity for property owners and investors to hold for the long term, means this asset class can withstand short-term financial upheavals better than most, which is likely to be the situation after the pandemic. There is a reason why the adage, as safe as houses, has been around for so long. True, but what we're seeing here isn't the same as previous recessions, isn't the same as the GFC, which technically wasn't even a recession. We're seeing fundamental demand drivers for property dropping off. Migration is dropping off significantly. International student numbers dropping off significantly. Unemployment going to a level that we have not seen in memory. You've got job advertisements crashing. Business confidence crashing. People crashing the ATO website just to get in their super money. All of this. So I think there's two sides to property, everyone. You've got the owner-occupiers. You've got the people who are buying a place. People, like us, we bought a fixer-upper. Oh, it is a dump, really. And I've been cladding a wall. We stripped a wall in the bathroom because we're reconfiguring it. So externally, I took all the old weatherboard off. It was all a hodgepodge, and we're using WeatherTex to put it on. And I like it. It's clipping in. It's good. And thank you to everyone who gave me advice on nail guns. I was too cheap. I went out there to Total Tools. I saw it, and I couldn't pay the money. I'm going to use a drill to go in the hardwood and pre-drill and just nail. I'm too cheap to do it. Tried to do my part to stimulate the economy. Instead, I just bought $20 worth of nails. But the thing is, if we took a property hit, if our property dropped in value, I really wouldn't care because we're here for a long term. We're close to Logan, we're close to the Gold Coast, we're close to Brisbane. We're not too far out to Ipswich. We're in a nice central location here. And we're close to all the amenities we could need. Be better if the internet was a bit faster. But then again, there's the other side. There's the investors, the people who have bought one property after another. And we're seeing them starting to materialize, I'd say, in the apartments, in the investment sector. Building approvals for investors or units, attached housing, that's plummeted over 30%. So there's a prediction. The market is saying, okay, there won't be as much demand, so we will not supply as much. Projects have pulled back. So we'll start to see hits to the investor side of things first. And I think I would argue to be much more dramatic. If you've got six investment properties, all native geared, all paying interest only, you're going to take a hit. You're going to have to take a hit. People will be forced to sell. And then you'll start to see first home buyers looking at this ex-investor stock going, wait a minute, maybe I'll do that for an option instead of going to this. I mean, you'd have to be bloody brave and insane to jump into like off the plan buying for apartments now. I don't know who would even consider that with everything that's been going on. So it's going to be interesting to see. I think investors are going to take a bit of a hit, particularly with the wonderful strategies of growing upon growing, making losses to save money. You still got to make the money to have something to offset, don't you? Which may not happen with all this unemployment that's growing. As always, thank you for watching. Let me know your thoughts and opinions. What do you think about these suburbs in Brisbane? I actually went out to Fig Tree Pocket for the first time back when I was doing Ubering. It's all on the other side of Brisbane. And I got out there and I was quite surprised. It was lovely. But then again, you could just as easily go south, about an hour, drive out, go, get nice acreage there, pretty cheap. And if you're working remotely, what's the difference? We'll have to see, everyone. Let me know your thoughts and opinions. Do you think this will continue? Do you think Brisbane is a better opportunity than Sydney and Melbourne? Or maybe going to one of the other cities? Do you think there will be a cultural shift? And how will that affect commercial property and houses? As always, thanks for watching. Please leave your comments and opinions down below. Like, share, and subscribe to the channel. If you want to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can use our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Thanks, everyone. I'll see you next time.